Okay, so we've reached the final part of chapter 2. You remember I said from part 1, this is really the first chapter, obviously, where we're really getting into the nuts and bolts of tax. Okay? Now, income tax, as mentioned, the biggest part of the syllabus, but indeed, the areas that we've covered so far, certainly there's some trickiness in there. So if you're thinking to yourself, as mentioned at the end of part 2, oh, this is a little bit nasty, don't worry, because, income tax computations, when you think about that picture, that diagram that we looked at, they have a lot of very straightforward parts. In other words, parts where it's not difficult to get the mark. For example, let's just say that the individual concerned is not a high earner. Yeah? Well, we would get the mark for slotting in the personal allowance simply by slotting it in. That's it. Nothing complicated at all. So let's take a look at what's in part 3, and mainly this area, or the most important area for me, is pensions. Okay, now you'll be familiar with, I guess, what a pension is. Yeah, in a sense, we're simply talking about providing for your retirement. On a personal note, this is a good idea for everybody. So, what are the rules in the UK in relation to pensions? Well, first things first, the state pension. Yeah. Now we know that national insurance, is sort of part of the TX syllabus, and indeed it can be paid by employees, and certainly paid by employers, and indeed the self-employed. So details in chapter 10, but in essence, what a person does, I guess, throughout their working life in the UK is contribute to national insurance, and what the UK government do, thankfully, is to provide them based on those contributions for 30, 40, 50 years or whatever. They provide them with a state pension. In other words, an amount that they'll receive once they get to state retirement age. Now, that sounds great. The only problem is, and this isn't relevant to TX, it's not a lot. Yeah? I mean, even if you're contributing at very, very high, it's not a lot. It's not a lot of money. Living on a state pension in the UK is possible, but it's not easy. Okay? But that's one form of pension funded through national insurance contributions. Now, for the reasons just stated, i.e. state pension isn't big, people fund private pensions. First one, an occupational pension. So this, very simply, is a scheme run by an employer. Yeah? And indeed, funded either partly or wholly by that employer. So really, we have an employer in the UK has a scheme and really is trying to encourage people, in a good way, to contribute not only from their own pay, but also will fund on top of that. So the employer may pay into the scheme as well, okay? What about the flip side? Well, if it's not an occupational scheme, say we've got someone who is self-employed, or even someone who's employed wants a bigger pension, they could fund what we call a personal pension. Okay, so it's just funded outside of an employment, by an individual for their own benefit. Again, this is a good idea, providing for your retirement. Now, as we'll see, there are benefits. In other words, the HMRC and the UK government encourage people to provide, really in the main, or certainly in part, because the state pension isn't big. So, in terms of relief, really, what we've got to be sort of familiar with is the difference between a personal pension plan, as stated above, and an occupational scheme. So, with an occupational scheme, contributions are paid gross into the scheme, and in effect, the tax relief, this encouragement by the UK government is given via the individual's employment payslip.